With the Bank of Canada announcing a quarter-point interest rate cut, what does that mean for the Kitchener-Waterloo real estate market? Find out in our full May market analysis. In this video, we'll give you a breakdown of May stats in Kitchener-Waterloo. We'll also talk about the interest rate announcement and what it means for the market in the future, whether it's good or bad. And we'll also discuss when the market crash could be expected.
The median sale price for detached homes in Kitchener-Waterloo in the month of May was $863,000. That's down 0.8% from the $870,000 we saw in April, and down 4.11% from the $900,000 we saw in May of last year.
For semi-detached homes, the median sale price was $700,000. That's up 6.71% from last month of $656,000 and down 4.24% from last May of $731,000.
The median price for freehold townhomes in May was $735,000, which is down 1.01% from the $742,500 in April and down 8.98% from the $807,500 we saw last year in May.
Condo Townhomes had a median sale price of $555,000. That's down 0.89% from April's $560,000 and also down 1.99% from last May's $566,250.
And finally, Condo Apartments came in with a median sale price of $445,000. That is up 3.25% from the $431,000 we saw in April and down 4.09% from the $464,000 we saw last year in May.
Hey, if you like this video, make sure you subscribe because we post a monthly market breakdown every month and we also release a new video weekly. The median days on market for freehold properties sat at 9 days, and for condos, it was 16 days on market. The total number of sales that we saw in May was 483, which is down 14.2% from the 10-year average of 563 sales. Of those 483 sales, 350 were freehold, which is up 12.9% from April's 310 sales and down 4.89% from last May's 368 sales. Condo properties saw 133 sales in May, which is the exact amount that we saw in April, so no change there, and down 24.43% from last May, which had 176 sales.
In terms of listings activity for freehold properties, we saw 668 new listings hit the market, and we finished the month with 583 active listings. And that is an 18% increase in active listings from April, which had 494 at the end of the month. For condos, we saw 428 new listings hit the market, and we finished the month with 620 active listings, which is 29.4% higher than the 479 active listings we had at the end of April. In terms of sales versus list price, freehold properties were selling for 105.5% of the asking price, and condos were going for average of 100% of asking price.
So that's a whole lot of numbers, but let's figure out exactly what those numbers mean. Based on the month-to-month change, we really don't see any significant differences. Prices have been holding steady for the most part. Those semi-detached homes did go up almost 7%, but that's kind of typical with semi-detached homes. Because there's such few sales each month, depending on the type of semis that sell, you're gonna see some big differences, whether up or down in price. With the other property types, we really only saw a difference of about 1% month over month, so there's not much that happened there. And that's really in line with what we saw last spring. It was that typical hot spring market, whereas this spring we really had an abnormal market with real estate.
In terms of sales activity, we're continuing to see the same trend that we've seen for most of this year. which is the number of sales being lower and then the number of active listings starting to build up, and we're starting to see more supply in the market. We're well below the 10-year average. We have less sales than we had last year, but the good news is sales did slightly pick up month over month. Now, the biggest reason that we're seeing this happen is because of that looming interest rate announcement that people were waiting for on June 5th. A lot of buyers were just sitting on the sidelines, waiting to see what happens before making their real estate decisions.
And with the interest rate announcement occurring just a few days ago, we now know that there was a 0.25% cut. This is the first cut in over 4 years and the first time since they started increasing the rates that they've chosen to cut.
That's right. The 0.25% itself is not significant. It's not going to be a huge savings on people's variable mortgages, but the fact that the cut happened itself is big news because this is what people have been waiting for.
These interest rates have been keeping a lot of buyers on the sidelines in anticipation of what might occur. And now with this cut, we do anticipate some more buyers leaping into action. And although we've had a slow start to the spring market, we could see a strong finish to the second quarter.
And I mean, personally, I've already started to feel some of those impacts. I've had several clients reaching out to me, asking about the interest rate cut and saying like, hey, we got to get into the market before the prices really start going up.
The more important impact of this cut is the fact that it signifies more cuts are to be had in the future. Some experts are predicting that we'll see another rate cut at the next interest rate announcement in July, and then one more before the end of the year as well.
Now, with more rate cuts anticipated, the fixed market is also going to react to this. Remember, fixed rates operate independently of the Bank of Canada's overnight lending rate, but they are still impacted by market sentiment and the direction that things are going in. So, expect more cuts to come within the fixed rate market as well. All of this is going to increase the number of buyers in the market, and it's going to increase buyer affordability. So even though that 0.25% cut is only about $15 of savings per $100,000 on your mortgage, it's the sentiment in the market that's really going to have the biggest impact and start putting upward pressure on real estate prices.
Now, with all of that being said, we've been hearing for so long about a market crash happening. So George, when can we expect this market to crash?
Well, here's the thing about this market crash or correction that everybody's been talking about. It's already happened. Let's take a look at this chart to better understand that. So here we have the chart plotting median sale prices starting all the way back in 2015 up until May of 2024. This is across all property types in Kitchener-Waterloo. You can see the peak here of COVID in 2022. And then this right here, ladies and gentlemen, is where the market correction already happened. As you can tell, we saw the prices drop. This is where we're sitting right now. We're below the line of best fit. And I don't believe that we're going to see prices continue to drastically drop like they did right here anymore with these rate cuts that have been announced. In other words, expect the market to recover and rise in the future as we start seeing more interest rate cuts and more buyers re-entering the market.
Again, with the interest rate cut that we just saw, we're expecting the stagnant market we've been seeing to start to pick up and see more buyer activity. If you need help navigating your purchase or sale, reach out to us. There's a link in the comments below, and we're more than happy to assist you. Until next time.